we go to the FX simulator on Investopedia and initiate our trades. Now Japan's opened and we see that Japan has already taken, the Asian markets have already taken the dollar yen to 112.72. So we've missed the breakout of the neckline, but we can still initiate our trades. Now the move from 112 to 170 has been quite rapid, so let's not expect that we would see a move back to 112 today, since the breakouts happened today. We have some existing positions that we've taken in December during the FOMC, but let's ignore these for now. So let's initiate the dollar yen position where we buy at the market. We will look at limit and stop later on, but right now we are buying at the market. So we buy $100,000 yen at the current market price. Now we can leave some conditions, orders, exit conditions like take profit, stop loss, trailing stops. We can also modify these later on, even after the trade's done. So let's buy $100,000 yen at the current market rate with a stop loss below the neckline. Let's leave it at 111.50. Now we have a choice between leaving it at a rate or by the number of pips. Let's assume you want to stop loss 100 pips lower. We submit this and we see that in our open trades we've got a new position, $100,000 yen at 112.72, the current market rate, with a stop loss at 111.50. Now we can also initiate another order at the neckline breakout. So we can place an order to buy dollar yen $100,000 at 112.10 and a stop loss at 111.30. So we put that order as a limit order since we do not wish to execute at the current market prices. Now if we go to pending trades, we can see this trade in the pending trades. So here we have a limit order for dollar yen and we can modify this order whenever we feel like. So we executed at 112.72. The market is now at 112.76. We are roughly 4 or 5 pips in the money, translates to $50. And we should look at writing these orders in the order book so we have the reasons, the analysis why we enter the order in the order book, so that when we reverse the order, we also know whether our analysis was correct or not. And it's as simple as that. We will look at other concepts such as margins remaining, the realized profit, the current net profit later on. Let's focus right now on the analysis part of it. The rest is basic math. Continue to execute more orders, continue to look at 3-4 different currencies. We also went short in sterling for 10,000 at 1.301213, and this was to average our previous shorts. So we could also look at the sterling charts. We could also decide to take larger positions in sterling, short, long, look at the euro, look at stocks, commodities, and constantly analyze these charts to such an extent that you're familiar with, to such an extent that every single support, resistance, pattern, the volumes, the open interest, every single detail is in your mind. So foreign exchange traders, interbank traders, are constantly monitoring these currencies 24 hours a day. Now you also need to look at what different markets are doing. So we also need to see what Japan does with the dollar yen. Japan, Hong Kong, Singapore, Australia does with the dollar yen. Once the Australia and Asian markets close and London opens, we need to know what London does with the dollar yen, where they take the dollar yen and where they close with the dollar yen just before New York opens. We next need to study what the New York traders do with the dollar yen and where they close, whether they're bullish on the dollar yen or whether they're bearish on the dollar yen. So what Japan and London do with the dollar yen, whether they take the dollar yen up now from 112.72 to 113 or 114, may not necessarily be the same as what New York will do. New York might take the dollar yen all the way back down to 112.10 or 112.20. So you need to differentiate between the markets. You need to know what each market does with that particular currency to give you more insights on whether all the three regions are looking at the same direction or there seems to be a lot of disagreement between the three regions, the three time zones. So we will look at where this position is tomorrow, how profitable our position is tomorrow, and whether our analysis is correct. So look forward to seeing you in the next trading session tomorrow.